Hello everyone, welcome back to Tech Video today. Today we are going to dive into the world of investment and margin accounts. So let's explore the key differences between these two accounts types and the implications for your trading strategy. What is investment accounts? Investment account is like a basic saving accounts for your stocks and securities. Think of it like a debit card for your investment. You can like only buy and sell stocks up to the value of the funds you got in your account, and it's a straightforward and secure option for those who prefer a more conservative approach to investing. Now let's talk about the margin accounts. A margin account is like offers a bit more flexibility. It allows you to borrow money from your brokerage firm to purchase more stocks than you could afford with just your own funds. This is known as buying on margin, meaning like you are using the leverage to amplify your return, but it also comes with increased risk. As we always say, there is no free lunch, right? So before we deep dive into the margin account, we need to know some key points about margin trading. So I will explain 9 points about the margin trading at the moment. Let's try with the margin account requirement. What would be the requirement for the margin account? So you need to open a margin account to buy on a margin. That's a simple, like as we go to the bank and when we open the saving account, is the simple process like that. Second one is government restriction. Margin trading is generally not allowed in government registered accounts. The third one is minimum margin, meaning your brokerage firm sets a minimum amount you must deposit to open a margin account. You can't just open a margin account and start investing. You have to deposit some required minimum amount in your margin account once you open it. Number 4 is stock eligibility, meaning the price of the stocks you buy can affect your available margin. So stocks trading below $5 might not be eligible for margin account, of course. Number 5 is maximum loan value, called MLV. Your brokerage firm determines the maximum amount you can borrow. The number 6 one is interest charge, meaning you will pay interest on the funds you borrow for margin trading. Number 7 is collateral. So the stocks you buy are used as collateral for the loan. Number 8 is margin calls. If your stock values drop, you might receive a margin call requiring you to deposit more funds to maintain your position. For example, let's say you bought stocks with the margin account, let's say 10,000 worth of stocks, and the stock price goes down about, let's say, $200. So now the minus $200 from $10,000 you have to pay to the bank or whatever the brokerage firm you are using. So you have to pay $200 to cover the $10,000. Sorting on margin means shorting stocks on margin has specific funding requirement as well. You can't just short whatever you want. It is restricted. Let's dive into the example to explain the margin call. So let's say you have $5,000 in your margin account and you short 500 shares at $10. Your broker requires 150% margin, so you need to maintain $7,500 in your account. If the stock price rises to $11, you will need to put in additional $2,750 to meet the margin requirement. Failure to do so could result in your broker selling your position without your consent. So in a nutshell, margin trading can be a powerful tool for active investor, but it's essential to understand the risk involved with it. Be be careful considering your risk tolerance and financial goals. You can determine if margin trading is the right strategy for you or not. Remember, always do your research and consult with a financial advisor before making any investment decision. I'm giving you the disclaimer, this is not a financial advice. This advice is just for the educational purpose. So please do your own research and then try to invest in any kind of account. And if you are interested in learning more about investing and margin trading, don't forget to subscribe to our channel for future videos. I will be covering various trading strategies and tips to help you make informed investment decision. Thanks for watching. Bye.